What is going on, guys? It's your boy TJ here at S&B. Well, we got some news Thursday. We got some bad inflation news. Big bad news on inflation. Producer price index came in red hot, way higher than everyone thought. Um, and as you might imagine, that was not good for the equity markets. We dumped yesterday. We're looking at the Nasdaq 100 right now. Triple Qs. Bad news, we gap down, we run up, fill the gap, we chop around for a good long 4 hours, and then what do we get? End of day rug pull, and I mean rug pull. We get rugged at the end of the day. Huge selling in this last hour of the day. We plummet a full percentage point on the Nasdaq. Looking at the S&P 500, we dump a full almost percent on the S&P. Basically a percent in the last hour of the day on the S&P. And now, as you might imagine, we are seeing follow through to the downside. Nasty bull trap. This was a nasty bull trap on Wednesdays. And now I know, hey, people are going to want to goof on me. But what did I say? I said I'm bullish until price action tells me otherwise. And until if data comes out that tells me otherwise, I'm more than willing to change my position. Because at heart, I am bearish as anyone. I'm bearish. I'm more bearish than anyone. This entire rally, I was saying, hey, I don't like this. I don't like this. I only changed my mind when I started to see the price action get so bullish that we kept getting pullbacks, and I changed my mind. And now I must flip-flop again to the downside. And that is what traders do. You call it flip-flop, and I call it being smart, because you don't want to get caught with your pants down if this market just completely rug pulls, which it is not really doing right now. So if we look at everything right now, tech is obviously leading the way down. It led the way up. It will lead the way down if this is one of those rallies that eventually falls apart, which is starting to look as if that's the case. Bond yields skyrocketing. Today, they're actually down 1%, but recently, the bond market has just been selling off. I mean, it started selling off at the start of this month. So bond market starts selling off start of this month hugely. It sold. People were buying into the stock market all through January. Yields are coming down. Come February, they flipped the switch, start selling, and bond yields kept coming up. But what did stocks do? Stocks didn't really do anything. I mean, we've been kind of coming down, chopping downwards, but not coming down nearly as quickly as the bond market. So the bond market and stock market are kind of playing a game of chicken to see which one falls first, and we all know how that goes. It's going to be the bond market that eventually wins that game of chicken, as it always is. The bond market is people in bonds way smarter, way more powerful. They got way more not leverage, but leverage in the terms of like how strong they are in the actual economy. When bonds sell off, it's worth noting. I was kind of ignoring it because the stock market wasn't telling me. The price action still looks so bullish on the stock market. But now it is clearly we have made a new high on these bond yields on the 10-year. If you look at the 2-year, 2-year has broken out of this like kind of bull flag. I mean, these things were all just basically in a bull flag. If you really zoom on out, these things are all really just in a big bull flag. Same thing with the 10-year. Just a nice, perfect little bull flag that we've broken out of. Or I should say bear flag for bonds, because the opposite happens when bonds sell off, yields go up. So this. My cat's getting crazy over here. This is kind of a sign that with this inflation news coming out, with inflation ticking to the upside, it completely deflates the entire rally. The entire rally was on the back of inflation is on the way down. It's going to keep going down, because then that means that they're going to slow interest rates, and eventually they're going to pause. We're going to get that golden moment when they come out at an FOMC meeting and they say, we are not going to hike interest rates this meeting. So that was this entire rally. It was pricing that future in. And now we got a hot CPI report on Tuesday, which I told you guys all about that. We get that hot CPI report on Tuesday back here at the S&P. Hot CPI report. We fill the gap, sell off. We end up closing up here. Wednesday, slow chop day, low volume. We get that bull trap. We fake out, break out of that bear or bull flag. And then we get that hot PPI news. Terrible, just terrible. So this entire thesis to the upside was what I just said, that they were seeing inflation coming down, even though they come out and say kind of the opposite, that they're like, we're not seeing enough inflation, we're not seeing enough disinflation, we need to see more. Even though they were saying all this, market just didn't care because we kept getting good inflation news. Earnings wasn't that bad. But now, the entire thing flips. Now, when you see those bond yields come up, that is because they're expecting rates to go up higher than they thought before. So it was kind of, we're at the point where the market was thinking that we were pricing in just 2 more 25 basis point hikes, I believe. And now we are, now we are seeing, so we have a 81% chance, this is the Fed watch, 82% chance of a 25 basis point hike this next meeting. It was like 99. It was like 100% we're getting 20. Now that's taken up a little bit. That is ticked up a tiny bit. And you could see this. You could see the movement. That's crazy. So just yesterday, it was 85% chance of 25 basis point hike, 15% chance. So now we are seeing this move. Now we are seeing a greater chance that we're going to get 50 basis points at this next meeting, which do not think I'm joking when I say this. That would absolutely be a rug pull. Like, the market would almost certainly dump a massive amount. I wouldn't be convinced that we're going to make new lows, but that would absolutely just deflate the entire bullish thesis right now. And I mean, that thesis is already, it was on the back of inflation is coming down, inflation's coming down, inflation's coming down. And now that has been thrown out the window. The PPI numbers were so bad, and I mean treacherously bad. Wholesale prices rose 0.7%, way more than expected. They were expecting 0.4%. So, yeah, 0.5% core, so that's minus food and energy, compared with expectations of 0.3. So this is just, it's just terrible. It's ticking up. We were on this gradual decline of everything's going down, but now it's not. And it comes after December, where we saw a decline of 0.2. We saw a negative 0.2% in December, and now we saw a rise of 0.4. I mean, it's just like, God, it sucks. So, and then mind you, that the CPI from the month before this last one, the CPI report that was released in January for the month of December, that was revised. That one showed disinflation, but it was revised last week. And actually, they came out and said, no, we didn't see disinflation. We still saw inflation. So they've revised that. They revised the PPI as well to come out and say, hey, we got it wrong. There was actually more inflation. The market really didn't react to that, which I was shocked by that. But I think it didn't react to that because it was still waiting to see this CPI and this PPI. And now it has seen it, and it is not thrilled with it. I'm honestly shocked that we are not dumping even more. The Nasdaq's actually making a little bit of a recovery right now. So right now, I've sold a lot of my long positions. I traded Google. I took a profit on Google yesterday. I took a very, very small profit on my Apple call yesterday. I'm very glad I did both these things. As you can tell, Apple looks like it's broken its uptrend. It's dumped quite a bit today. Google, same thing. I took a loss on Amazon call, so I deleveraged heavily. I sold a SPY call today for a loss. I've deleveraged heavily. I'm not hugely to the short. I grabbed the short overnight. I took a nice little profit on that too early today because I sold it, and then the market dumped way more than it looked like it was going to. So right now, I'm only holding like Datadog, Square. I have a SoFi call a year out, a very in-the-money, long, far expiration date call on SoFi. And that's all I'm at. That's my position. I even sold my Bitcoin. Bitcoin, by the way, it's looking all right today, but just smack dab hard off of 25K. Like I told it, no one should be surprised by that. But it's finding some nice support. But I know Bitcoin can ignore the stock market for a certain amount of time, but when the reality just kicks in that everything's going to go down, eventually Bitcoin just plummets with it. So I'm not saying Bitcoin's going back to lows right now either. I'm just thinking I can get a better entry at a later date. I really think this this rally has ended, and I think now I'm not fully short. I'm actually not short at all, but I'm also way deleveraged. I'm not very long at all. I'm liquid. And right now, I'll tell you what I want to see for me to actually take a major short position right now. So on the Nasdaq, it's pretty clear we are still just holding. Looking at the 4-hour chart, we're still holding this supply or this demand zone at 298. We have still just bounced nicely off of that. Right here, bounce right off of that. So a breakdown below that, retest and break at 293. And it's looking pretty miserable. It's looking pretty horrendous if that happens. Not gonna lie. And why do I say it's looking miserable? Because we really consolidated heavily up here. We did a lot. This was, I mean, 2 full trading weeks of consolidation up in this zone of just chopping around, consolidate. And that's why I said down here, hey, the more consolidation, when you break out, it's going to be a big move. So, I would say if we come down below 297, I'm getting really bullish. If we come down below 293, I'm getting, or not bullish, bearish. If we come down below 293, I'm very bearish. If we break that 200-day moving average on the Nasdaq, then I'm extremely bearish, and I believe that there's good reason to be. Same thing with the S&P. So now the S&P has broken this support that we had at like 4,100. And we're actually kind of retracing back to the upside right now. But on the S&P, if we can get the break below 40, and then of course the big psych level basically at 4,000 on SPX, break below that, and yeah, things look atrocious to the downside, because I do believe there will be continuation to the downside, because I mean, it was just on the back. That's where you see the most downside, is right on the back of a big rally. You see the big rally back in March, big rally back in August. You get the most downside, continuation to the downside right after one of these rallies. And what has happened in each of these rallies? That's always the same thing. It's always, hey, we think inflation's coming down. Hey, we think the Fed is going to be dovish. We rally. And then what happens? Oh, reality kicks in. Actually, earnings were terrible. Inflation's coming back up. The Fed might hike more, longer, harder, faster than we thought they would. All of these things are just completely just shitting on the face of the bulls and their entire thesis. And now it looks like, I mean, I was ignoring that thesis was valid. I come to you as a bear. I am deep down so bearish on everything. I'm so heavily bearish on everything. I come to you as a bear, trying to just show you that you cannot ignore price action, because people were bearish over here, and they get cooked. You just got to wait for the data. Because if you're very confident in your bearish thesis, then sure enough, data will come out to support that thesis. And I was very bearish over here, saying, hey, yeah, I wasn't trading bearishly, but my mind was still bearish. I was like, I could see just inflation ticking back up, because this entire rally is just on good CPI report. What if inflation just ticks back up? And sure enough, it did, and you just had to wait. I mean, you didn't miss much. S&P is like 3% off of its highs, so it's not like you shouldn't feel FOMO to the downside if you like, oh, I didn't short at 417. Like, now you can short at 405 if you want. You can short 400, because what do we know about these rallies? They always go up big time. They rip up big time, 20%. And then what are the percentage gains to the downside? Oh, they drop down about the same, 20%. But, I mean, they drop down $80. So, I mean, you do the math. This pushes up $68. This goes up goes down $84. So you do the math. I mean, the pullbacks are always way quicker, way easier to trade, like straight down. It's super easy money. So that's why I'm never like, oh God, I'm FOMOing. Why did I not grab puts? Because I know if the market does choose downside, then there will be downside, and it will be easy to trade. So that's where we at. My favorite short setups right now are AMD. I think AMD is looking red hot to the downside. It is looking like hot trash right now. AMD, I mean, semis in general just ripped so insanely hard. They made incredible rallies. But AMD has broken its structure. It's broken this bull flag that it was in, and now it has a monster gap to the downside, which it just filled a little bit. But it's one of these things. Everyone sees this gap. It's not going to just go straight through it. Also, it has just lost its 200-day moving average right here. This blue line, we just lost that 200-day moving average on AMD. It looks incredibly bearish in my opinion. NVIDIA is not there yet. NVIDIA is very, very easy to me. It is a break of this level at 207.70. Break below that, NVIDIA is, I mean, Jesus, dude. Nvidia can see some freaking downside. And it has earnings on Wednesday of next week. So this can just bake up to be, I guarantee, I would not guarantee, but I'm very confident what what Nvidia is going to do. And since Nvidia is the king of the semis, it will yank the rest of the semis down with it. It is just going to chop, chop, chop until Wednesday, and the earnings come out. Somehow semi earnings have been received very well by the stock market, even though in my opinion they've been horrendous. So if it gets earnings that are really bad, which they have in the past few quarters, they've missed the past quarter. They missed big time on the past quarter, I believe. Let's get this shit off my screen. Yeah, they missed terribly. I mean, they hit on revenue, missed on EPS, but it's really guidance. Like if they come out and just give atrocious guidance, which they will, every company has been giving bad guidance, it could see a big dump. Like a big old dumperoonie. And that is what I see for Nvidia. So we chop around, earnings come out, we dump, in my honest opinion. I'm not predicting that. I'm not shorting it right now. I will let the price action tell me if that's going to happen, and then I will short it. But today we're seeing very high volume selling on Nvidia. It is just super overextended to the upside. Super crazy vertical climb to the upside. Could do the same thing back down to the downside. Apple, even though I love Apple. Apple, to me, is a great short. Obviously, just massive gap at 148. Basically, on Apple, we got a big gap below that. I mean, if we break that support, I think Apple, it's already broken its uptrend line right here. Pretty clear. It's already broken that uptrend. And sure enough, first day we break it, it's come down nicely. So Apple looks good to the downside below 148. Honestly, it looks good to the downside right now. But I'm just like, I need to see the Nasdaq break the support, because the Nasdaq is the entire story. The Nasdaq is the most important chart in the stock market right now. It led the market up. It's going to lead it down. So that's why I'm more interested in shorting tech, because I think it will have the most downside, because tech is just the most affected by the rates. They're most affected by potentially longer interest rates, higher interest rates than the market thought. So that's why I really like a lot of tech companies right now, the downside. I mean, I know it's crazy. I know. Earlier this week, go watch my past videos. I'm here saying I'm looking bullish. Things are looking great. Things are looking bullish. Things look great. Bullish, bullish, bullish. But then I said asterisk. Hey, if data comes out, it will change my mind. I will let the data change my mind. I'm not just 100% technical. I will let the fundamentals come out and change my mind. And it has to be true. If we were ripping to the upside because inflation was coming down, we're going to rip to the downside because inflation's coming up. And that is just the way it is. Anyways, guys, I appreciate y'all for watching. I would ask you consider dropping a like and a subscription on the page. Drop a comment if you think I'm some dumbass, and if you want to be a bear who is like, see, I told you things were going to come down, then please do, because I get a kick out of it, because bears that's just always what they do. No matter, even if the market's going straight up, bears will just be like, see, I told you it's going down, and then yeah, after 2 months they're right. So bravo to the bears. But anyways, I'm going to wait a little bit and see some confirmation, because I know if the Nasdaq breaks the support, we are going to see some heavy downside, at least a retest of 290, this 200-day moving average. If we break back below that, oh boy, we could see new lows on the Nasdaq. I don't know about the S&P 500, but I could see some new lows on the Nasdaq. But if we do just find support at this 200-day moving average and we pop back up, then we have put in a higher high and a higher low, and I'm not going to fight that. I will not fight that. So, yeah, let's see what the Fed says. Let's see what everyone has to say. It's going to be a lot of Fed talk. We've been getting speeches from the Fed members. It's going to be a lot of that. And the market, it can go from ignoring everything the Fed's saying to now every single word the Fed says is very important, and we have to listen to all of it. And I think the market is about to go to that point. So when it does that, it usually goes down. Anyways, thanks for watching, guys. Peace.